closing costs and down payment and everything else in a retail model cost you $20,000 or $30,000 to get into the house, where you have another one that only costs 12 to 15. That may be the barrier of entry difference. It's like the difference between actually being able to close on a house and buy your first home or not. And so that type of benefit, I think, is just, it's hard to look away from.
One of the things I wanted to clarify, when you say price, that means lower interest rate and or lower cost.
Yeah, I'd say it's both. A lot of times it's both. It's interest rate and the cost for the loan.
And so what I heard you say is that a retail lender, they're going to have a specific appetite for a specific type of loan that they like. And it doesn't mean they want to rip off that customer that has a 580. It's just they don't necessarily want that customer in their portfolio. And so therefore they're going to price it accordingly.
Absolutely.
And so, and I agree with you, because I had worked with borrowers in the same situation, and, you know, sometimes it didn't work out and they were able to get a loan with, you know, with another. As a broker, we have the option as a mortgage broker to go to a bank that does have an appetite for that particular borrower.
Absolutely.
Which is amazing. Yeah, it's that's incredible. And then what are some of the other characteristics, would you say, or other benefits? I just made the switch just recently, coming out of from 2006. It was like 15, 16 years, something like that, being in retail. And so I'm really enjoying this model. It is a little different on the origination side.
Yeah.
Yeah.
I'd say on multiple fronts, and maybe I'm being funny as I bring it up, but I think your originators are in better moods. Like, you know, they've got more to laugh about and more to smile about, because there is, for someone that does well in this model, I think for me specifically, I found there's something that like matches my origination style. Instead of be required to say no, I always wanted to have a yes mentality with my clients. If somebody comes to me and they want my financial help to help them get into a home, or, you know, figure out their financing in some way, shape, or form, I never wanted to have to turn them away. And so I think this model gives us the ability to not only find the right product, have a great price for that product, but it's like, I have way more as it relates to multitudes of different types of products, whether it's renovation loans, construction loans. I get to work with real estate investors, and I have solutions for them, both short-term and long-term, any different type of like financing land loans. Like I've always been someone who has attracted I just want to help everybody in some scenario. If I've got clients that want my help as a professional, I'm not just limited to the certain product box that a mortgage banker, and like nothing against mortgage bankers. I think finding your lane, and you know, I would say that there's originators that can do really well with like, hey, this is the type of loan that I'm really good at. For me, I love residential real estate. I love working with self-employed individuals. I love working with investors, and I have way more options as it relates to that when you just have a multitude of different banks to choose from.
The ability to offer a lot more for your self-employed borrowers, for investors, having a lot more options. And the retail model that I came from wasn't as plentiful as other investors, or as what we have as a broker.
From just the business side of a retail, you know, mortgage lender, and on the banker side, like it's expensive, and it's a layer of risk to be able to offer that many products, and businesses could not sustain themselves to do that.